There's a lot happening in the markets and the next move is underway. I'll ask you, the audience, what your thoughts are. You can vote in the poll section below. What comes first? $95,000 Bitcoin or 70,000? Let me know in the poll section, which is pinned with the comments over there. And let's get straight into the show content. You can see still a sea of red, right? An absolute sea of red on the hourly. Starting to get a bit of a pullback, but half and half on the daily. Some of the coins are still holding up over there. We'll discuss where the opportunity lies. The only trade that I'd be looking to take if prices did reach the current levels that I'm looking at. Let's smash the like button, hit the bell notification, and get straight into it. So one of the things to look at is what the DXY is doing, right? Of course, there's a lot of volatility still taking place. We've been focused on this over here. If the DXY does start to reclaim back above the 100 mark over here, you know, that could show a bit of a deviation, and that's going to add additional pressure for the risk on assets. But if you can start to see closing candles moving towards the multi-decade trend line over here, well, that probably gives altcoins and Bitcoin the next push towards the upside. As it stands, when it comes to the crypto markets and the stock markets, there is still a lot of liquidity still tied up in those markets, and it is theoretically still overvalued, right? If you look at Warren Buffett's indicator, which is now normalizing, what you're seeing over here is that the GDP ratio, so stock market cap to GDP ratio, fell from 210% down to 179%, but it still puts it 40% overvalued or above what we saw in the 2000 dot-com bubble levels, which means, of course, you could still see theoretically in the medium to longer term some further downside. Remember, we spoke about yesterday the death cross between the 50 and 200 moving average on the stock market. We've now officially got that death cross. We spoke about how those death crosses oftentimes act like a magnet, pulling price back into that, which would have resulted in about a 5% upside move for the stock market. So the question does remain, will you still be getting that 5% move, right? Well, if we do look at the stock market over here, that 5% move would pretty much take you slap bang into this resistance zone over here. And if we do actually zoom in on some of the low levels, like the hourly, well, you can see yesterday was rejecting off the 50% level, so showing weakness even before getting to that 5,600 to 5,700 level. So that is still on the cards over there, that 4%. Now you got about 4% as opposed to the 5% before finding major resistance. But when you do look at a lot of these different charts over here and you focus specifically on the RSI, well, you're still very, very far away from retesting back into that RSI on the daily time frame, which would be resistance. You can see the QQQ as well. RSI still does have room to move towards the upside. So if you do get that 5% move, although it will be very, very exciting, understand the RSI is going to come into that as a trend rejection retest of that level, and you're coming into resistance with a lower high over there. If we look at the Dow Jones, same thing over here, still missing this gap over here, which has to be retested with your 200-day moving average coming towards the downside. That's at 41,800, a bit of resistance over there. You can look at NVIDIA, right? NVIDIA very, very, very close to coming back to test that downsloping trend line on the RSI, so right at that key resistance level with the 200 moving average. Basically, there's a lot of work to be done by the bulls, right? And if the bulls are to strike, they need to strike very, very soon and start to recapture and reclaim some of these key levels in order to consider this a massive trap and shakeout or a temporary short-term scare within the markets. But when it comes to Bitcoin, the levels to reclaim still remain above head, with major resistance on the high time frames around that $92,000 to $93,000 region, which is actually where we exited just before the major dump took place. So according to this chart, you know, although there is a little bit of relief taking place over here, the more likely outcome is if we do get that spike up, it's going to be met with resistance over here and selling pressure, and then you probably do come back down to those low levels. So as per the poll, what comes first? 95,000 or 70,000? I would still actually be inclined to believe that there is a chance that you see 95,000 first, right? A big spike up, a big bull trap that takes place once again as they think you're reclaiming the trading range over here. And that's where you would need to be looking to de-risk your positions, right? So if you haven't de-risked already, it makes complete sense if you do get that short squeeze over there to de-risk out of your position. And then all your opportunity cost is if you can start to reclaim above some of these levels, you know, and you de-risked over here, you're just buying a little bit higher, right? But with a much safer entry. And that means that you're avoiding ultimately a lower high, which could threaten breaking down this massive bull trend that we've had for the entire cycle, right? So that still remains the game plan. Remember, we spoke about speculation around Michael Saylor having potentially bought. That news did come out yesterday. They updated the sheet. He did, in fact, buy on the 14th of April, which is part of the reason why we were seeing, or at least it was announced on the 14th. I think they might have been buying over the course of the weekend, which is why we saw some of those pumps take place. Now, commonly, following a Michael Saylor buy, you often see prices dip shortly after, and you can pretty much just look at that, right? A lot of the buys, look, there you go. You got the buy, price dumps, right? You got the buy, price dumps. You got the buy, price dumps. You got the buy over here. This one led towards the upside. But since we've had a macro shift in structure, you need to take it with a pinch of salt. And relative to his other buys that were higher up over here, these are much smaller. So, of course, he works around in terms of money that's been raised. So usually he raises the most amount of money towards the top, which means he's putting in the biggest buys over there, which creates a terrible trade situation where your average cost entry keeps rising higher and higher. So you can see, if you look at that over there, the average cost is now hanging on the screen line just below $68,000, which I still think could add some pressure, right? If we do see something like that, the big spike up, maybe a lower high, and then you slam down into that 68K, coming back down towards his key levels. And one of the things that you need to look to, if the Michael Saylor buy is actually going to get faded, is going to be this, right? The daily exchange volume with the 7-day moving average is slowly starting to roll over. You can see over there, it's slowly starting to roll over. So if apathy comes into the market over the course of the coming days and weeks, a big thing that I also want to remind you of is, what do we have coming up this weekend? Well, of course, it is Easter, the Easter long weekend, right? So a lot of the world is going to be switching off when we're in these low liquid, low volume environments. This is where you can see a lot of trap scenarios take place. And you probably want to be careful of that, especially leading into tomorrow, where we do have Jerome Powell, which is going to be addressing everyone at a press conference, right? So we'll see. Use this as a bit of a guide. Structure has not been broken. The key level to reclaim is $75 billion. That will create your first higher high. Otherwise, the volume has just been lower lows and lower highs. And that's like taking the wind out of the sails of a boat, right? The market will struggle to have a sustained rally, which means you have to take every rally with a pinch of salt in that environment. Now, it doesn't mean that you can't play the upside, right? That is still there as a possibility, especially in the form of a short squeeze. But understand it's very, very tricky conditions, and it comes with much higher risk, borderline gambling, right, at this particular point in time. So still have that lower high and lower low structure, still caught at the death cross intersection over here for Bitcoin between the 50 and the 200, but you're attempting to close your first daily candle above. We haven't managed to close a single daily candle above the 50 moving average. You can see yesterday's candles rejected, right? Rejection, and you got a lot of overhead resistance. Now, as the saying goes, buy support, short sell resistance. So theoretically, on the low time frames, you could look for some smaller triggers, in the sense that, you have got a break of structure, right? So this last lower high that occurred over here, you have theoretically broken above. So a lot of traders will be looking to position into risky trades if you do get something like this, where they're going to look to trade that up into those high levels in the form of a bit of a relief rally. But I would encourage you to look for both sides of the trade, right? That is what professional trading is about. If you're a low time frame trader, look for both the short and the long trade. So the long trade would be if you get that little bit of a pullback over here into the 80K region, and you start to put in a bit of a high low, you could theoretically position with a very, very tight stop loss and trade that up into the $90,000, maybe even $95,000 region. But at the same time, on the very, very low time frames, you should be looking for scalp shorts as insurance. And that way you eliminate your risk as quick as possible by reducing your, moving your stop loss back to break even on both the short and the long trade. And then you can start to let the winning trade play out, right? So the bullish signs that we were looking at, remember we spoke about this, we took this trend line as absolutely conservatively as possible. And when I say conservatively, I mean as favorable for the bulls as possible, which means taking it from this trend line to this trend line over here. And once we start to break that, then you start to look for some upside momentum to kick into gear. But you have to use it with context, like with everything in trading. The context is, what is the volume doing, right? The context is this going to be another situation where Saylor created the initial pump and there isn't actually any real demand that's going to be coming in? And are you above or below key resistance or support levels. So with context, this just shows that maybe the tides are going to begin to shift, which we discussed yesterday. You have got a couple of daily closes now above that trend line. You've also reclaimed the key 50 mark over here. So that is nevertheless interesting. When it comes to the weekly, which is going to be your higher time frame guide, this has not yet broken structure completely, right? I'll show you why in just a second. So if we have a look at this over here and we just quickly tighten this up on the weekly scale over there and we make it as picture perfect as possible for the RSI. Some of you may say, well, what are you blind? Are you blind? You can see that it is above that level over there, but just consider this for just a second, right? You have this level over here, you have this level over here, you have this level over here. And what we need to do next is we need to pull up the price chart to see what last week's candle did. And the way that we can do that is we can use a vertical line and we can click over that and that will print that vertical line. And let's go like that, make it 2 points. And then we go back and zoom into the RSI. And what you can see over here is actually, no, we haven't, right? We have to wait for the weekly close. So the weekly has not yet broken out of this RSI downtrend. You can see that candle that closed last week pushed the RSI exactly into resistance. Remember, this part of the candle over here, which is currently this week's candle, is not confirmed yet. So if prices were to come much lower, this could easily break down, right? And close lower below this trend line over here, which would be considered as yet another rejection. However, this weekly candle, if it closes over here or higher, would show that the weekly has also broken out alongside the daily. Why is this important? It's important because it tells you that this week, all the action is going to take place, right? There's going to be a lot of interesting things taking place this week because this week we'll either have a confirmation that you have started to see a proper breakout of the downtrend, which allows for that relief rally to about $90,000 to $95,000, or alternatively, the bears are still in control and you're going to continue towards the downside, right? So time will tell, right? It's a ticking time bomb over here for both the bulls and the bears. And this is the one trend line that we've been looking at towards the downside. You are starting to see price pushing into there, but look at the volume again. Study that volume. The volume is coming towards the downside, right? And if we look at the volume profile for the overall trading range, so that's coming towards the downside. We're starting to reclaim some key levels over here, but there's a lot of resistance overhead, which is why the bias would be that if we did get a relief rally, you're going to most likely be met with major resistance at that $95,000. And that's where you're going to be looking to offload. Basically, I mean, dare I say it, but that's probably where you're going to be looking to offload your spot positions if you haven't already, right? Because if this was a lower high and we're going to lead into a bear market, that's exactly where you would expect that to take place and the macro downtrends to continue, right? Again, what is your opportunity cost? Your opportunity cost is literally the distance between here and here. If you can break through all of that, then you can say, great, we're back into new all-time highs, bull run continues, and all you have to do is reposition. So the level to reclaim is still the same thing, $88,000 on a daily. We want to see a break above that. Now, this is where the trap scenarios can kick into gear, right? This is why I say look for both the long and the short trade opportunities. Look for the hedge short trades with the spike into the liquidity. The order books are very thin, and they're going to be even more thin leading into the, the Easter weekend, right? The little bit of an April holiday that much of the world is going to be taking. You can see liquidity overhead about 15 million over there, 14 million over there. Basically, give or take, this puts you in about just around that $86,000 region. So watch for the spikes into the $86,000 region. If you're met with a swing failure pattern or rejective candle, that's going to be very indicative, right? And if you look at this, there's some big levels defending that zone, right? Or big sell orders coming into play. If you look on, we dropped this, by the way, in Whale Room, which is the private Discord. We dropped the High Block Capital and the Trading Light. These are paid tools, but we give them to you in there for free, right? And interpret it. So you can see positive funding pretty much across all of the various different coins over here. The deltas are positive. It tells you that longs are opening up positions, already preemptively anticipating the big breakout. And that's where you can start to see those trap scenarios, right? So be careful of the sell pressure coming into these key zones over here as the bulls try and attempt to reclaim the VWAP over here on the 4-hour time frame. And it would look something like this, right? So you may have already seen the rejection and the high before the big pullback. And this is what I mean by it makes sense to take out the short trade as well. So let me just quickly clean that up. That was the incorrect chart over there. Let's grab our, where's the tool gone? What is happening over here? There we go, our short trade over here. So Of course, the higher and closer you can get to that level, the better. But theoretically, you know, if you're trading the Monday range, that was already a sweep of the Monday high, right? So, you know, would there still be a favorable risk to reward ratio even at current levels? The answer is yes, it would be. You're looking at about a 2.623. And the premise for this is that maybe some of those orders got front run, right? Leave a little bit of room in case you do get into the 86K level. But if you look at this hourly chart over here, which I actually did just drop beforehand, if you go into whale room under Captain's Take, I actually shared this as it was happening over there, right? That candle coming into key resistance over there. This is the Monday high. It's also the previous month's mid-range. And not only that, but it matches up perfectly with this downsloping trend line where we've drawn it as absolutely conservatively as possible, right? Touch point 1, touch point 2, almost had touch point 3 over there, and price is coming down. So while a lot of people are looking for the breakout, which is entirely possible, you have two criteria that's been met over here. Criteria number 1 is you've swept the previous month's mid-range and you've swept the previous month's high. That opens up the trade for a very, very quick short-term scalp trade, right? A short-term scalp trade with a very tight stop loss just above here. And then you can still also reposition coming down into these key levels. If you do get something like that and you sweep Monday low, you look to flip back long over here, and that's where you can trade it back to $95,000. So a lot going on, right? If you're not a low time frame trader, you might struggle to understand what I'm saying. If that is you, just ignore everything, you know, from pretty much this chart forward, right? So that low time frame stuff is not going to necessarily be relevant to you. But in the interim, that's kind of the things that we're looking at. If you are a low time frame trader and you want to take the trade, right? Guys, this is one of the most insane opportunities on Bank. By the way, their sign up deposit, I just want to be clear, their sign up deposit actually is withdrawable, right? So if you deposit, if you go over here, there's a link in the description below to Bank. Let's see quickly over here. Bank, you know, you can sign up and you can spin the wheel to win 1 ETH. The sign up bonus offer that they have will allow for you to also be able to trade with that or withdraw it. Even if you want to withdraw the sign up bonus, you theoretically can do that. But if you do deposit more than $100, you know, for those of you at $100 or more, you can claim $20. That's your sign up bonus, and that's withdrawable, right? Then come through over here, register, spin the wheel. You can win yourself 1 ETH, 1 SOL. What is this? 0.001 BTC. That's absolutely insane. 100 Pi, 10 XRP, 5 𝗬ci, 5 Cardano, or 10 Doge. You have a 100% chance of winning something. You are guaranteed you're going to win something over here. So come through, spin the wheel. It's a whole lot of fun, and try and win the ETH. I think that's the highest prize pool. All right, looking at this over here very quickly as well. Let's line this up with the hourly chart, right? If we line this up with the hourly chart, you can see on the 15-minute time frame, the open interest has been building, and you have longs building up over here as well. So I think pay attention to this. I think the next you know, well, this is going to close in 16 seconds. So let's see how this candle closes. This could be the start of the reversal if this candle closes red over here, which it does look like it's going to. So keep an eye out on this. If it were to play out, you know, maybe into US Open, you start to drop all the way back down towards that 83.5. So there we go. Closed as a red candle. Now, you know, you can start to reduce your risk. If you already took this trade, stop loss above there. If you want that tight stop because you're on high leverage, you can start to drop this below this candle high. Up to you. Okay, cool. What else have we got over here? So, yeah, we spoke about this candle. At the end of the day, you have flipped this level. So if the scalp trade works out, I'm now on the 4-hour time frame. If the scalp short works out and you do come back down here and find support, that's where you're going to be looking to flip long again. And that gives you the trade opportunity into that 90 to possibly even 95K level, right? For most of the charts, we spoke about this yesterday, I think, and the day before. For most of the charts, you'll be targeting around the yearly opens, right? On those coins. If you do manage to time the long entry, you're targeting to the yearly opens. I think that if we are to hit these lower levels, remember this 70 to 72K level, there isn't enough liquidity, right? At the moment, there isn't enough going on. The volumes are pretty low. What that means is they need to engineer the liquidity. The way they engineer, the market makers engineer the liquidity and the energy or momentum to get down towards those low levels would be something like this, right? First, a spike towards the upside gets everyone uber bullish, and then they start to pull the plug, and that's where you get enough momentum and energy to drop it down into the 70K levels, right? So step by step, one trade at a time. This is essentially the trade plan, right? Bitcoin dominance is absolutely skyrocketing over here, continuously pushing towards new all-time highs. pretty unbelievable when you consider this wick over here. At the time, we're looking at filling 50% of that wick, but look at those closes, right? This shows you it's probably going to go beyond that level, and then you're going to meet this trend line, and then your key point over here is the 0.786 at 66.27%. So a lot going on. ETH BTC continues to get crushed towards the downside, and we're getting ever so closer towards the next target, which is 0.01656. And we're looking for, remember, a sweep of that level. We want to see a sweep of that level like that, right? So time will tell, right? All right. USDT dominance grinding into the support level. If you do get that spike up towards the upside, towards the 90K region, you know, you might see something like this, a little bit of a drop, a fake out over here. And then on the reclaim, if you did get that sort of deviation or reclaim back into the trading range, that would drop price from 95, creating the lower high and sending price to much lower levels. If the bull market would be back on, you would expect to see something like this, a break below the 5% level, acceptance to be gained underneath, and then you can start to target on the USDT dominance back towards these lower levels. The only way I believe that you're going to see any sort of an altcoin season is obviously with the breakdown of Bitcoin dominance, and the USDT dominance would need to spend time under here. So as you can see, we're very, very, very far away from that happening, right? Price needs to travel all the way down here first, and we're not at that point in time yet. All right, we can have a look at some of the altcoins. Let me know in the comment section if there is anything specific that you do want to have a look at. But that is the gist of it when it comes to Bitcoin, right? That's the plan for Bitcoin. A lot of moving parts, a lot of things to focus on. If you don't understand trading, you're probably more confused than ever now after this show. Remember, it's a game of probabilities. If this happens, then you do that. If the other thing happens, then you do something else. That's what trading is, right? It's kind of like signs, right? You're driving down the road. If you see this sign and tells you to do something, you turn that way. If you see another sign and it's showing left, then you turn left. That's literally what trading is. We're reading the signs here. All right. Popcat, Pengu, Fartcoin, Pepe, Giga, literally all meme coins. Unbelievable. All meme coins. You guys just want memes. All right. We'll go into some of those. Let's have a look. Let's quickly find this other chart over here. All right. Let's move on to the daily time frame. So here's our daily, and let's go to some of those. So Pengu. All right, Pengu, USDT. We don't even have this chart yet, but let's have a look at the one on Bybit. Okay, so, I mean, it's pretty bearish. You know, that could be the lower high. This is still just lower low and lower high structure. It needs to basically gain acceptance above last month's low. If it can start to close multiple candles above 0.0050, then maybe it has a chance to trade up towards the mid-range. Otherwise, all that you're literally seeing over here is, you know, a downtrend. So, and you would expect, I mean, even a spike up over here could be met with resistance, and that's something you do need to be careful of. Look at this. What happened here? Now it's like purple or something. Our colors have changed. All right. Okay, what were the other ones that we had? Popcat was another request over there. So let's go to Popcat, USDT, and we'll have a look at that. Okay, Popcat. So in terms of its range levels, it is at least attempting to reclaim some key levels. I think it gets very interesting if it can reclaim and hold above this 29 cents, right? Call it even 30 cents. If it can start to get above 30 cents, then you might be talking about a bigger deviation over here because you have this tight trading range. There you go. And you'd be breaking out of that trading range, which means, again, where do you target? For most of these coins, if you do get a big short squeeze taking place, a lot of them can squeeze all the way up here to the yearly open, right? And still be bearish, by the way. That would be an exit pump, basically. The other one that you guys asked for was, what was that? It was Giga. I think you guys said Giga, right? So we'll go to Giga USDT, and let's have a look at that. So Giga, okay, it's holding the previous month's mid-range. You do have a macro high-low, but you haven't broken any structure yet in the terms of putting in a higher high. So again, look for the reclaim of the previous month's high. And if you do get that and there is a broader relief rally, you know, if you get something like that and there's a bigger relief rally, then probably it'll be looking like something like this. And the squeeze, I don't know if you're going to get that, guys. I mean, that's pretty intense. I don't think you're going to get a squeeze all the way to the yearly open on something like GigaChat. But I think what's more realistic is first level, the 0.033. Second level, you can probably make it towards these inefficiency candles over here, which is going to be at just under 50 cents. All right. Okay, we can go to SUI. Let's have a look at SUI. So 𝗬𝗎, there is a bit of a trade opportunity on 𝗬𝗎, right? Of course, it comes with increased risk, but on the high time frames, you do have a bit of a bottoming candle over here. So any pullbacks, into this region over here around the previous month's low, that can be held. You have to time it with Bitcoin. If Bitcoin manages to come into the 80 to 81K level and start to find support and you start to get a trigger on the long trade, then simultaneously you would expect something like this on 𝗬𝗎, right? So a bit of a pullback, hold the previous month's low, you have low, high, low, and then again, you're trading it where? Possibly even up to the yearly open. I don't know if this one will squeeze that high. Level to level, I'd trade to previous month's high, maybe to that 3.58, right? That becomes a pretty big squeeze, and then that could still be a macro high, lower high, and then continuation towards the downside. Another thing I wanted to mention is the Volt token, guys. I spoke to you about the Volt token before. Let me just quickly click on that. That's the 𝗪𝗪𝗔𝗍 airdrop. It's coming out on Kraken. It's going to be next week, but there's a really good opportunity for those of you that want to get a whitelisted seat, right? If you're interested in this, by the way, 𝗪𝗪𝗔𝗍 is one of the best wallets that are out there. They list basically everything, got multiple cross-chain, open source, and audited. It's very, very safe wallet to be using. And I think it's probably one of the best wallets out there, right? If you go to the link in the description below, you'll see it says whitelist raffle. It's a raffle where all you have to do is put your EVM wallet and your X handle, right? If you do that, they will, through a raffle system, pick a couple of those wallets and they'll let you know if you're whitelisted. If you're whitelisted, what it means is you can take up to a $10,000 position at a very low valuation, a $3 million market cap, right? So when it launches, typically these things launch at multiples of that, which means you can 10x, 100x. I don't know how big the multiple will be when it launches, when the token launches in about a week's time. But yeah, there it is, right? Link in the description below if you do want to take advantage of that. All right, let's go back to some of the requests that we have over here. So where is that chart of ours? Giga. Okay, Mantra. Guys, Mantra's wrecked. It's not coming back. I'm just telling you, I even got a DM from someone on from Australia. They say on Instagram. They said, "Hey, I'm from Australia, and I just woke up and I saw Mantra's down a lot. What do you think? What should I do?" And I basically just told them it's not coming back. And there's your chart, right? So yeah, over time, it's probably going to full retrace. I must be honest with you. Over time, you probably see it come all the way back down towards these low levels, right? So can mark out some of these levels. Yeah, I would say you're probably even going to sweep that over there. So there it is. What have you still got left on this? Of course, you might get gamblers that come in for the relief rally, but once something goes down 80, 90%, remember, it can always go down another 80 to 90%. You'd never see coins like this return. Show me one chart of any coin that dropped like this and came back. I don't even think that you would make it for relief rally into this. I don't even think you'd get it up to 124. Cool. I mean, I mentioned to you guys before, we played this all the way to the upside. We actually got long somewhere down here. We had an amazing, amazing trade on this, probably one of my trades of the crypto cycle. And I started to exit between here and here when it started to break structure towards the downside. Of course, I could never have guessed that it would do this in one go or would have opened up a big short. Okay. Sol recovered from 13. Sol, there's no way that Solana has ever put in a candle like this. I mean, we can literally go to Solana. Yes, it recovered from 13, but you get organic sell-offs and then you get non-organic sell-offs. This is not an organic sell-off. There's never, ever been a sell-off in Solana like that. Where do you see one single candle that looks like that? All right, Audi. Let's have a look at Audi. Okay, Audi, the ordinals, I'm assuming. We'll have a look at this one on Binance. Okay. Oh, my word. It's terrible. Straight down as well. Lower lows and lower highs, kind of like Pengu and those meme coins that you guys just showed me or asked me to look at. Where do things change for this coin? Pretty much around here. You need to start to reclaim this level. 868. If you can start to get above 868, you reclaim the previous month's mid. Maybe at a push, you can consider that a deviation then. So you need to do something like that. And then anyway, you're probably still going to have a big pullback to put in another high low. So I would definitely not rush into buying something like this. Injective. Sure, let's have a look at Injective. Injective. Okay. Also, still very, very, very bearish, right? Straight downtrend. You know, a lot of these downtrends, you broke the downsloping trend line, but that doesn't mean just because you broke this line that it can't go lower. You know, this is just a trend line. We're showing you the trend. What is the direction of the trend? All you have to do is put an arrow on it, right? If you're confused. There we go. It's a downtrend. It's a downtrend still. Just because you broke this doesn't mean that you go to the moon, right? That's not the way that it works. So what do you have to look at on the injective, right? I think you need to see a lot of work to be done. And this always creates like a psychological challenge amongst new people because it means it might have to run 43% before it even breaks structure. You need to get above the previous month's mid-range, take out the last lower high. That means you've got your first higher low or higher high, excuse me. And then after that higher high, you then look for the next high low. And then you can say, you know what, maybe you have like this inverse head and shoulders. So you got your left shoulder, you got your head over here, and you got your right shoulder, and things are starting to reverse a reaccumulation pattern, right? A low, a lower low, a high low. That's where the shift takes place with the break of structure over there to confirm it at the X mark. And then you can start to look for the long. Shows you, the point is, there is no rush. Absolutely no rush. Mitch, if you have this many coin requests, you should just go into Whale Room and go to Ask the Team. There's no way, bro. Come on. 𝗠𝗿, we just did 𝗠𝗿. Let's have a look at, okay, Polkadot. Do you want to see another great coin? Polkadot, let's do it. Let's do Polkadot. Let's go to Polkadot. Polkadot USDT. Okay, should we use the one on KuCoin? Which one? Let's use 𝗪𝗁𝗔𝗄. We know it would have been around for a long time on 𝗪𝗁𝗔𝗄. So Polkadot, where'd it go? Polkadot. Oh, here, we're on it. Are we on Polkadot? Yes, we are. There we go. Here's your Polkadot chart. Let's just quickly zoom out a little bit. Polkadot is dead. Polkadot died a long time ago. So Polkadot is below the reaccumulation range lows, right? 93% down. I don't believe this coin will ever, ever, ever return. If you want my honest feedback, that's what I think. You know, is this a key range low level? And could it put in like, you know, some sort of a small bounce because it's range lows? It could, definitely, right? It definitely could. But what you should expect on a more serious note is that every single one of these bounces will just be a macro lower high, right? So, and that's coming off the major highs. There we go. So you had the bull run highs, lower high, and then you put in the move over here, lower high, lower high. So even if you do get a bounce like this, another lower high, and eventually it will just go to zero. Okay, eventually it will go to zero. It will never come back. I don't believe, I will be willing to bet you anything that it will never, ever, ever see those highs ever again as long as crypto exists. Okay, what else? XRP, let's have a look at XRP. Okay, XRP USDT. But there will be relief rallies, guys. There will be very, very, very big relief rallies. Huge relief rallies. There always is. That's as if we were to be transitioning into a bearish market, right? So we spoke about this. If you can continue to hold the yearly open, you're talking about a potential move up into that level, similar to Bitcoin. I already covered this, right? I'm just going to quickly highlight some key points over here. So you have this level, right? This is your last lower high that led to the breakdown, now marked in red. We'll put it there in red, right? So you've broken that structure. You're creating a little bit of an order block over here taking place. So basically, if you can maintain above the yearly open, Bitcoin short squeeze to 90 to 95K equals the short squeeze for XRP up to about 244. That's what you'd be looking at. All right. Okay, what else have we got? Brett, we can have a look at Brett. I can't imagine it looks too good either since it's part of the meme coin sector, but nevertheless, you asked for it. Let's see. Okay, Brett USDT. So pretty much coming right into that zone where you would expect the next lower high to take place, right? If you're just focusing on this trend, it's still lower than this level over here. You've at least broken that little bit of structure over there, but this is going to be the wick high. Let me guess, that's probably on Wednesday, right? Let's see. Wednesday, yep, similar to Bitcoin. That is the Wednesday high. So you probably want to get above the Wednesday high to begin to shift the structure. But as far as trends go, you know, this is still lower lows and lower highs. So if you do get a rejection from here, that's going to be another lower high. If you push through and break above this level, obviously don't chase the pump. Wait for the next pullback, which will then create the high low. And then this is where you buy, right? In this zone over here for a relief rally trade. Not necessarily for a long-term hold, but for a relief rally trade. Okay, so I wouldn't be surprised if bullish, break this. Then it probably still throws back all the way down here, like something really, really scary maybe in May, and puts in a macro high low, and then you get a bit of relief. It will take time. Okay, and what about 𝗶𝗴? Let's have a look at 𝗶𝗴. Do we have 𝗶𝗴 on here? We must have 𝗶𝗴. Let's quickly see how, because 𝗶𝗴 is the strongest of those lot of meme coins. So how's 𝗶𝗴 looking? Okay, so last time we looked at 𝗶𝗴, you know, we were looking for a sweep. I see you didn't quite get the sweep. Price put in a bit of a high low, started to move up over there. So if you can get to target 2 and close above there, the previous month's high at 929 or the last 3 digits, then you've officially shifted structure ever so slightly, right? Then you can look for the next high low to be a buyer, which would be at a similar price to right now. All right. Cool. Let me know in the comments, guys, any other questions. We can go to Hype. Hype's already put in a big relief rally, so I can't think that there's going to be much opportunity over here. You know, you hit the bottom of the parallel channel, you deviated back above the previous month's low. We spoke about that. Hence, we got the little highlights over here. You know, you've now rallied up to where would theoretically be your first TP. Based on the way price structure is forming over here, I definitely wouldn't be surprised to see it run up like this, right? And then you're hitting macro resistance. That's going to be the top of that parallel channel's downtrend. Previous month's high, right? Big level of resistance. Between 20 and about 21. That's going to be a super key zone. Okay, for the rest of you, I mean, if you want to ask the team a question, come through to this section over here. There is an Ask a Team section over here. Where do we keep this? Here we go. Ask the team, click over there, and you can come through and you can ask the team whatever question you have. Type in there. We'll answer you over there, and join into Whale Room. That's where all the alpha is going to be at for these lower time frame trades. And then, guys, spin the wheel. Remember to spin the wheel. That's it from me. I'll see you on the next one. I hope you all have an absolutely lovely day. Tomorrow's big day with Jerome Powell speaking, but it's only going to be much later on in the day. I'll see you all on the next one. Have a great day, and cheers for now.